Hello guys and welcome back to AceTeam FX. This is the dollar index daily chart. I expect the market to move all the way down here, 89.23, this area here. However, if we do see a market break above, I expect it to move upwards, come down, reaching this area high. Okay, but my objective is still the downside, this area here. So be patient, guys. Those of you that didn't sell here, then wait for the breakout, retest, and continuation. Okay. This area, there is a possibility of long here, but because of the US and the North Korea news between the Trump comments and threats, all these stuff, I expect this market to be bearish. Okay. It's most likely to be bearish all the way down here. Okay, this is the pound dollar. Previously, I mentioned about this level being taken out. Okay, a lot of people think because it's taking out these lows, it's gonna be bearish. So most people are shorting here and here, this area here, because they think it's a nice 62% retracement, which I mentioned previously. Most traders will be shorting. However, I said it's gonna take out this high, okay, the 3400, 1.3400, and it's even gonna go further. That's what I said. Now I expect the market to retrace a bit. Okay, this would be a nice area to long. Okay, I still have a further target to the upside. However, there might be a further retracement before bullish. But because, like I said previously on the dollar index, the North America threat and the North Korea threat, there is a possibility that it's gonna go up. Okay, it's probably even gonna gap upwards. Okay, all the way to this area here. This would be an ideal next target area. This is the dollar yen daily chart. Previously, I would like to see this target being taken out. However, we were about 20 pips away from it. So it was quite a lot of pips, okay, that we made all the way from this area here down to this area. However, after this movement, the market start becoming bullish. I start becoming long at this area once this high was taken out. Okay, I was long at this area here because on the lower time frame you can see this high taken out, a nice little pullback here and continuation. Okay, so those that didn't enter here, you will have to find other opportunities to go long. Okay, at this area, the monthly resistance, I had a sell limit at this area here. I'm looking for bearish movements now. Okay, not just because of the monthly resistance. There are actually more confluence that I look at before setting this thing. Okay, this thing tomorrow we might have a gap down, but I expect it to reach this area. Okay, I expect it to reach this area. Those that want to sell but don't know where to sell, wait for the market structure to move all the way down. Okay, all the way down. Once it gaps downwards, we look for a nice pullback. A nice pullback. Okay, remember, go down to the lower time frame. Okay, when we're looking at the bigger picture, we look at the overall market condition. But we go down to the lower time frame, we don't look at the overall market condition when we go down there. We look at trading opportunities, when to enter. Okay, once it pulls back, we look for price action. My next target, ideal target, would be this area, the 105. But let's first take down this low here. Okay. There is a second scenario. If price pushes back, okay, but it doesn't show any strong movement downwards, I expect the market to move upwards instead of downwards. Okay, so these are two scenarios, but remember, always wait for confirmation. A nice downward target area here, then here. This is the oil. Previously, I mentioned that this low should be taken now. However, I see a pin bar over here, which made me decide to take most of my positions out. But I didn't enter long here because there was no certainty that this was turning bullish just because of a pin bar. Okay, this was like just a few pips away before taking out this low. So think of it, moving out oil position is safer than just waiting for those few pips to be triggered. Okay, when you see this movement here, you don't just rush into buying bullish. Sometimes pin bars happen like this one, but it doesn't mean it's gonna be immediately bullish. You see, here's a bearish pin bar. Pin bars don't work well on its own. So what I did was I wait for the market structure to break upwards. Once it breaks, most traders, they probably start buying here because they think, oh, this big move, it's going up. So what they do, they buy over this area here, and then they place their stop loss here, or even here, and then they get stopped out easily. They get stopped out easily here. So what I did was I wait for a nice pullback over this area here, highs, the highs of the lower time frame. You see a nice pullback, touches this area, it moves upwards. But remember, in market structure, price doesn't push up in one direction, or else this would be skyrocketing all the way in like one day. It doesn't happen that way. Price needs to catch volatility from the buyers and the sellers. So what they do, sometimes when you miss a trade, you don't have to rush into a trade just because a nice 1-2 big move upwards. Okay, we wait for a nice pullback. So for those traders that miss this trade here, you don't have to rush in or rush in. We wait for a nice retracement area. Okay, once it retraces, it will move all the way up. Now we are at a critical area. It all depends on the time tomorrow during London Open. We would see if price, because during Asia Open, price will probably be ranging most of the time. So we would see if price pushes up immediately during London. If it doesn't reach this area, it will be the best time to start shorting. This is what normally happens. Comes down. Okay? It's gonna take out this low. Once you see this low taken out, we don't have to rush. If you didn't sell here, if you didn't catch this area here is for aggressive traders. Remember, if you didn't catch this, don't rush your trade. I expect the market to pull back, but only if this low is taken out. A nice pullback over this area here, then we continue bearish. We continue bearish all the way down here. Okay, but if market structure moves rapidly, just keep your buy position because it is most likely it's going to take out this area here all the way up here because this is a previous high. It's going to take it out before we do another movement. So this would be my bias. For those of you that are really interested in trading and wants to learn, we have a 50% off at the moment. Just send us a message. We'll give you a special code for the 50% off. The course will give you an idea of how to enter the market and how to look at the market structure, how price works. It is important for you to understand how price movement works before trading, or else you guys will be selling all over the place or buying all over the place, not knowing the correct area and over risking. Remember guys, I only risk 30% max. Most of my trades are 50%, 15. Say for instance here, it's like 15% trade. When I trade here, I put my stop loss at the bottom because I know where the market is going, where it's heading. Not because all highs work, but we need to identify the real market structure, where price is heading. It is understandable. So remember, if you're really interested in trading, we have 50% promotion. Just give us a message, send 50% off. And remember to like and subscribe for weekly market review.